Hey, Andrew here from The Investor's Way, and welcome to Woody's Weekly Wisdom episode number 5. Gee, they're chalking up numbers very, very quickly, it seems. So, look, this week I want to talk about something pretty exciting, and it's both here in Australia and the US, so relevance to everybody that's tuning in, and hopefully some good news when it comes to interest rates. So this headline struck me when I was just doing a bit of research to find what people might be seeing out there. And I'd actually seen something similar to this related to the US market. So I thought if it's happening in both markets, it's absolutely worth talking about this week. So this one says that there's a leading indicator that predicts the Reserve Bank of Australia rate hike run is over. So for those who have been following along, Australia has had 10 interest rates increases in a row, 10 months in a row, and the impact is being felt across the country. And finally, it seems as though someone is listening. And there's a whole host of things that I could cover today, and I'll try and ram as much in as I possibly can to give you what I think is happening here. And I want to link this headline. I'm not going to get too much into the detail of the article itself, but link what's happening with this headline with also what we're seeing in the US. So I'm sure you've heard about the collapse of a bank, Silicon Valley Bank in the US, which is a small bank, very niche in terms of its customer base, but it's sent ripples all around the country, even to the extent where Credit Suisse has had its share price plummet by 30% for no reason other than people are being fearful. And as a result, they just sold the stock. And with Silicon Valley Bank, we saw people based on a rumor started just ploughing money out of the bank, which caused it to effectively require a bailout. Not that they're using the word bailout because that's more fearful language. But all of this is off the back of the fact that we've seen massive increases at a very rapid rate in interest rates. And it's no surprise that that's led to obviously a lot of fear. But at the same time, it's also led to a lot of chaos because rates have been going up so quickly that businesses haven't been able to adjust, and households are finding it difficult to adjust, and it's just creating a whole host of pressure and fear in the markets. So when we see a headline like this one, basically what it's saying is that there's the ASX uses, the Australian Stock Exchange uses this indicator, and it's saying that maybe that as a result the interest rate hikes might be ready to pause. And so even though this metric that they're using hit the 100% target on March 14, the Reserve Bank of Australia still managed to increase rates. But that was a week earlier they increased the rates. So we've still got a rate hike number 10, but we're now starting to see talk in the financial press about maybe we've reached that point where we can slow down or at least pause for a month to see what impact these increases are having. And there's no doubt about it, these increases are having a massive impact. This expert warned that 880,000 Aussie households were in the firing line this year as fixed rates expire. So we've got a lot more impact of these increases still to come when these people come off these very low fixed rates and into a variable rate that is much, much higher than what they're used to paying. So the fact that inflation is supposedly the driver of these interest rate hikes, which is designed to slow people's spending, there's 880,000 households that haven't even felt the impact of these things yet. And when they do, it's going to have a massive, massive impact on that inflation number. And I want to come back to inflation or head to inflation now, because what we're seeing is in the US, we saw their inflation rate drop again. Now, it's still at what is considered historically too high a number, above 6%. But for the last 6 months in a row, the inflation rate in the US has been declining. Only marginally, but it's been declining. So that indicates in the US something good is going on in terms of people reining in their spending. Now in Australia, it's been going up, at smaller increments, but at some point, we're going to see this almost this contagion of impacts all hit the market, and that inflation is going to drop quite dramatically. But it's interesting that with headlines like leading indicator indicates that hike run is over, we're still hearing lots and lots of talk of, I guess, the impact of these interest rates. And so I guess the positive that comes out of this, and I guess the main reason why I wanted to talk about this one today, is that it brings, for those people who've been fearful and have been effectively bunkering down or holding off on doing anything when it comes to their wealth and investing, and maybe that's by pure need, and I understand that. But if you've got some capacity and you've been holding off because you've been worried about everything that's going on in the markets, this is, I guess, a headline that for the first time in almost a year, there's some encouragement. And as I've been saying to everybody, for anyone who will listen, 2023 and even in my opinion now 2024 are still going to be fantastic opportunities to get yourself set with some investments, whether it's stocks or shares or both, at prices that are going to be effectively the Boxing Day sale prices. And you're going to look back in 5, 10, 15, 20 years and say, I'm so glad I invested throughout that period to pick up those discounted prices. And you're not going to see a headline that says, the stock market's on discount or the property market's on discount. You're going to see headlines of, stock market might be about to crash or property market's about to crash. That's what gets people's eyeballs. But the reality is, we all know that markets go up and down all the time. And in fact, an even lesser known fact is that the stock market virtually every year will have a decline of 10 to 20%. Less so the 20%ers, but definitely the 10% decline every year. But we don't talk about it because it's not a crash, it's not a contagion, it's not a historical event. And if we're consistently acting upon our investment strategy, we're picking up discounted prices along the way, which just fuels the acceleration of your wealth creation. And that's what we're all about at the Investor's Way, and our Wealth Generator program is all about accelerating your wealth creation and getting you to your financial freedom number quicker. So this week, we're seeing the signs that maybe the aggressive interest rate rising strategy that the banks have been using is starting to slow down. And potentially we might even see a pause in increases whilst we just, while the federal banks and the Reserve Bank here in Australia, while they just pause for a moment just to see what's happening and the impact of what they've been doing. And as they always say, they put interest rates up to slow our spending down, but as interest rates go up and put a lot of pressure on businesses, they have to put their prices up, which puts inflation up because we're having to spend more on essentials. So at the same time as we see this headline today about potentially a pause in interest rates, here in Australia, we're hearing about up to 20% increases in our electricity prices. Now, everybody uses electricity in most cases. Maybe not everybody, but the majority of the population uses electricity. And if your electricity bill is going up by 20%, that's got to come from somewhere. And so it's going to reduce your spending on other items. But it still feeds into the inflation numbers. because electricity is an essential service. It feeds into that inflation. And so it becomes a bit of a self-fulfilling prophecy that we as consumers are being told to cut back our spending, but then we're seeing massive increases in things that we have to spend money on. And that just becomes a circular argument. So hopefully this week's trend, what we saw in the US, where we saw another reduction in inflation, and we're seeing now some indicators suggesting to the RBA that maybe it's time to just pause for a moment and see what's happening with the existing 10 interest rate rises. Let them take effect before you keep hiking any higher. Yeah, so this is, I think, a good thing. I think it's positive for those people who are contemplating investing, because it just gives you a little bit more confidence that things are going to stabilize, and so you can invest with a little bit more confidence, and just allows you to get on with creating your wealth. So some good news at last, and that's a good thing. So I hope that's helpful. If you want to have a conversation about your wealth and your journey and how we might be able to help, make sure you reach out. There's links underneath these videos or in the emails you're getting from us, and just schedule a time. We have a 15-20 minute conversation, find out where you want to go, what you want to achieve, and if there's a way that we think we can help you, we'll certainly let you know how that can work and how we can make that work for you. So hope you enjoyed Woody's Weekly Wisdom, episode number 5. I look forward to seeing you again next week, hopefully with some more positive news to share and talk about and help you on your way with your wealth journey. Have a great week. Speak to you again next week.